Welcome to the Geoeconomics Podcast. I'm your host, Aleksa Burmazovic, and today I'll be speaking with Amine Khalladi. Amine is the founder and CEO of Hashing Farms, which is a cryptocurrency mining firm based in the Kish Free Trade Zone in Iran. So today's conversation, I think, will be most useful to those who are curious about cryptocurrencies and blockchain and how they interact with special economic zones. We don't go too technical during the conversation, but I think it might be very interesting to understand some of the more commonly used terms that may or may not be clear, such as non-fungible tokens or regulatory sandboxes. So, without further ado, here's Amine. Amine, how are you doing today?
I'm great, thank you. How about you?
Doing quite well, thank you. Well, Amine, your activity in the Kish Free Zone of Iran is quite interesting. Can you tell us a bit more about it?
Yeah, we ended up, exploring different free trade zones in Iran because of our mining activity. Yeah, Kish is pretty much, let's say, one of the main free trade zones in Iran in terms of volume of trading that they have, and as well one of the best in terms of location and its proximity to the Gulf, to Dubai, and to many different shipping routes.
So, if I'm not mistaken, Kish is like a resort-style island, isn't it?
Yes, it is. So it is an island, like pretty much off the south coast of Iran, close to Bandar Abbas. And yeah, tourism in terms of inside tourism, like people moving in Iran, it is a pretty touristic location. But at the same time, you have an international airport in Kish, and it's an important location for other activities. And it's very attractive for foreign investment as well, being a free trade zone.
And you're a foreigner who came into Iran, right?
Yeah, exactly. So I am Tunisian, so I hold a Tunisian passport. Again, I was quite lucky in my personal life to have a sort of connection with Iran, but the main purpose of actually going there and exploring was the mining business. So back in 2017, I believe, or 2018, we had there was a major mining conference in Tbilisi, Georgia, and there I had a chance to meet with a lot of Iranian citizens that were really, let's say, at that time, they were really at the forefront of mining in Iran, and it was really interesting.
Right, and we're not talking about metal and like cobalt mining, right? We're talking about a different kind of mining.
Yeah. Sorry, I should have precised that. We're talking about cryptocurrency mining. So yeah, the main attractive point about Iran is that it is a rich country. It have a lot of resources. This gives them the ability to be able to produce electricity at quite a low rate, and that's really where all the attractiveness for miners stands out, because mining cryptocurrency is basically exchanging electricity for cryptocurrency.
And I mean, this isn't the only zone out there that's been focusing on crypto mining. So, for example, in Buryatia, in Russia, there's, well, specifically in Siberia, there's also been a crypto mining special economic zone that's been functioning. So what I wanted to ask was, what about a special economic zone or a free trade zone makes it good for cryptocurrency mining? Is it just the electricity, or is there some other stuff they can do as well?
Definitely some other stuff. So yeah, you are right. Definitely, we are seeing more and more countries supporting, let's say, the mining activity. As you said, Russia, and as well another emergent country in this sector is Kazakhstan, where mining is recognized as an economic activity, and the government is pushing to receive investment and to be able to attract miners to Kazakhstan. In Iran, it's a little bit different. So, of course, electricity price is an important point in the free trade zone. But the other important point is actually being able to import and export miners with more ease and less fees. So, being a free trade zone, you are exempt from import fees on miners. And the other, as well, important point is the taxes. So, being in a free trade zone as a foreign investor, you get 20 years of tax exemption, and that's really important. We are talking about, let's say, an overall tax reduction of 26% overall. So that's a pretty important number.
So another thing that we'd discussed in a previous conversation actually was the question of how this mining equipment sort of circulate from certain economies to others. So many of these rigs actually start their work in places like the U.S. or European Union, these highly competitive and mature markets. And then they sort of move from place to place. Could you tell us more about that and what the lifetime of a mining rig actually looks like?
Yeah, absolutely. So it's really funny because like right now we can consider the S9, Antminer S9 as being the most popular miner that has been in existence. It has been terminated years ago, its production, but it is still a miner that today is profitable and quite curious enough, it's still profitable in places such as the US right now. So everything is based on the price of electricity, really. So we are talking about, let's say the US, we are talking about maybe an average of 7 to 9 cents of a dollar per kilowatt hour. We can look at other countries such as Sweden. We're talking about 6 or even less cents per kilowatt hour. We're talking about Iceland, for example, which is again in the same region of prices. And from there, so we have who is going to be mining. So basically, mining is really requires a lot of capital because aside from the infrastructure you're going to need to run these machines in terms of electricity, the machines themselves are quite costly. So it's a game of capital. Like in the US, we have a lot of capital, and we can easily see a company such as Riot Blockchain ordering millions of rigs directly from Bitmain and getting them delivered to the US. But at a certain point, for example, when Bitcoin price, for example, keeps decreasing or the difficulty keeps increasing, which means there are more and more miners into the system, but Bitcoin price is stagnant, which means all the miners are sharing the pie now between themselves. So the actual revenue in dollar is reducing. Then certain miners or mining farms start to look into liquidating some of their machines, maybe to get better machines or simply to have some capital, so to have more capital to be able to work with. There is when really secondary market, enters, and basically the rule is that this machine is moving from a high electricity cost to a lower electricity cost. So we might see some miners moving from the US to Russia, for example, in some mining farm that offers you 5%. Then we can see it moving to China, back to China, in some mining farm where you can mine in the good season at 3.5 cents. And then it goes on and on until probably they're going to cross Iran, these miners, for sure, at a certain point, like when there was the crash of Bitcoin last year and the halving after that, S9s were not profitable in many of the countries. So anywhere on top of 2.8 cents or 3 cents was too expensive of an electricity. So we see ultimately these miners moving to Venezuela, for example, where electricity is pretty much cheap. We have a lot of mining in Venezuela. It's very profitable, but at the same time, it's very complicated. There's no regulation. There have been a lot of instances where miners get their stuff sequestrated without any accounting after that.
I'm also sure that that power outages might be a problem with regard to mining in Venezuela. A different aspect of the whole thing is that when the industry of mining depends almost on a single variable, which is the price of electricity kilowatt per hour, then you have this very strange situation where investors are constantly having to move their rigs around and keep running to jurisdictions and places with lower prices, because it's almost like this one category, the price of electricity, is the only thing to look at. Whereas compared to, say, attracting, blockchain businesses as clients to special economic zones, you're looking at a completely different set of incentives. So, I mean, for example, you'd have the Cagayan special economic zone over in the Philippines, and they're trying to build themselves up as the crypto valley of Asia. Then on the other end, you have Cayman Enterprise cities in the Cayman Islands, and they're also host to, say, Brave Browser and various other high tech companies that are sort of in the blockchain space as well. I was wondering if you could tell us more about, say, from a blockchain standpoint, from like a technological innovation standpoint, what is it that SEZs need to do in order to attract the proper type of investment?
Yeah, I mean, the initiative is pretty good, and usually it's very, let's say, very political. We've seen it happening with Switzerland. We have Zug as recognized as a crypto valley. We see it happening in Malta as well, where Malta became like a blockchain island. Yes, still yet to deliver on that promise. But in terms of special economic zones for blockchain enterprise, I think one of the most important things, if you are on site, is to be able to have a talent pool available for you to develop your business. And I understand that right now that might not sound very important because everybody's working from home, teams are more and more global. There's not really the necessity to be in the same place. The other important point is legislation and regulation. So being in this kind of sandbox for development and being allowed to experiment and have let's say bureaucratic response that is at the same speed as your development is really important. Like what we see happening right now is that crypto and blockchain are moving so fast, and regulations, legislation, and laws are having a hard time catching up. Same goes for, if we're talking about cryptocurrency and not only blockchain, same goes for central banks, where they will soon find themselves outdated. So I think the initiative of really creating these zones for blockchain and for blockchain development is important, and I think it's more than just the aesthetical, let's say, side of saying, oh, I am the blockchain country, I am the crypto valley of this place or that place.
Right on. So I think that you hit the nail on the head there with regard to regulatory sandboxes, because you need these sort of innovative spaces in which, completely new and unregulated, just by definition, it's unregulated because it's a completely new thing that hasn't been around before. You need this safe space in which this technology can play around. And then once you identify what the best practices are with regards to how you regulate it, then you can identify those and spread them around to ensure safe innovation in other places as well. You also mentioned something regarding central banks getting obsoleted, and as much as I am for that, there are different predictions going on with central banks, particularly regarding central bank digital currencies or CBDCs. So this is like a cryptocurrency issued by a bank or something like that. I'm a novice in this space, but I'd really appreciate it if you could tell me more about it.
Yeah, sure. Basically, here we are talking about the cryptocurrency, so the technology applied to the national currency. It's really not much more than that. It doesn't take away from the bank their ability to be able to mint or print more money to put in circulation, and it doesn't. Let's say it doesn't really innovate that much. And just the fact that it's a cryptocurrency now. It's what the central bank is offering to their citizens in the form of a cryptocurrency instead of cash or any other. So I don't see that it brings a lot of innovation. However, we are at the beginning of this. We don't see many countries moving this direction that fast, aside from China.
So can you tell me more about the Chinese development? I've heard that they've been practically the first country to implement a nationwide state-owned cryptocurrency. Can you tell me more about what's been going on in China?
Yeah, basically they are trying to develop this digital currency, let's say experimenting, and the idea is to have like a digital Yuan, digital national currency. Why is that? Like you want to be able to offer the transparency that blockchain offers in terms of transaction. But again, I would like to really pinpoint the fact that it doesn't really take any power away from the banks or from the central bank. Like China keeps releasing documents, about developing this cryptocurrency, and there are talks about digital payments. But China is already pretty digital in terms of payment and its citizens as well. So it's not going to come as a shock from China. I think it's one of those things where it would benefit more a country where it's hard to get in, where you have, like, for example, a lot of unbanked people, or it's hard to enter the finance world, or it's hard to access capital as a citizen.
Oh, absolutely. I mean, compared to a place like, for example, Russia, which is a very heavily cash-based economy, I think that digital penetration in China is just sky high. Looking at stuff like WeChat's paying function, or just the level of penetration of digital devices in China, I think it makes a lot of sense for this evolution to happen in China of all other places. But the thing that I don't necessarily get is what the value of this digital yuan is compared to the already digital things that the Chinese are using, like credit cards and WeChat Pay. I'm wondering if you could shed some light on that.
I believe in terms of value of the actual currency, this is not going to affect the economy, is not going to have any change in terms of trading the currency in an international market. However, they will affect the economy in a way that now maybe you will be able to exchange, for example, Yuan for Bitcoin or Yuan for any other cryptocurrency in a direct way, rather than having to go through, I don't know, a clearinghouse or an exchange or the actual government itself. So that would be really nice to see that central bank digital currencies are integrated with decentralized finance, with the DeFi movement. So being able, for example, to, without providing any KYC, without providing any data about yourself, you can swap Yuan for Bitcoin and then take those Bitcoins and swap them to Euro somewhere else and be able to spend that money. But again, it's a central bank, and of course, this is not going to happen. It's not going to be decentralized because by nature it's a central bank, and this is not going to, how to say, I don't think this is, as long as it's centralized, it's not going to bring value to the users as much as decentralized finance.
Right. I see what you mean. Particularly, the matter of decentralized finance is interesting in this space because even though China is sort of the largest centralizing force in a lot of ways, they've also got some very interesting ventures coming out of there, and we can say whatever we like about the direction that the yuan is going, but the decentralized finance aspect of it definitely lends itself to international use. I was hoping if you could tell me more about what decentralized finance is and like where the biggest use cases might end up.
Sure, yeah. So, okay, kind of self-explanatory, no? Decentralized finance is basically accessing the financial world in a decentralized manner, where, let's say, the whole system is run by protocols and smart contracts. So one of the main applications I see spreading and I see, let's say, the value for it is the process of borrowing. Like borrowing money has been the business of banks for since they've been there. And right now, you can today, which is pretty crazy, you can since a few years ago, but you can today have some crypto assets and basically use your crypto assets as a collateral to borrow a USDT or a USDT equivalent amount of your collateral in crypto. This for me has been really, I think it's pretty revolutionizing. Like right now, maybe the application of it is not so widespread and it's not so mainstream. But the concept, though, is pretty amazing because if you are right now in a bull run, like we are, we are in a bull run in the crypto markets right now, and you happen to have started this bull run with some Bitcoins on your hands or some Ether, any kind of crypto asset, then you could easily be able to run your business in an independent way financially. So you can, let's say you need to start taking advantage of this bull run and you are like somehow a trader or a businessman, and even in the real world, you don't have to be in crypto to do this. So what the decentralized finance allow you to do in a loaning protocol is basically take your cryptocurrency, lock it in a contract as a collateral, and you can take, for example, right now it's 1-to-2 the ratio. So let's say you put $10,000 worth of Bitcoin, you can take a $5,000 loan. And then you can take that loan and do whatever you want with it, and it works exactly as a normal borrowing system.
So let's assume that it were a bear market going downward. I'm wondering what sorts of defense and hedging strategies might exist for people using decentralized finance in this space. Because on one end, obviously, there's various ways that you can make money in a bull market. But what might be even more interesting is the defensive finance that happens during a bear run. I was wondering if you could expand on that.
Sure. Obviously, there are like multiple strategies. Being in decentralized finance doesn't mean you are within the crypto market, because being in the crypto market gives you the opportunity to own crypto as a dollar base. So, for example, let's say you are preparing for a bear market and you want to like sell your positions or sell your crypto. You can do that, and you can have the equivalent value of your cryptocurrency in dollar, in crypto dollar, USDT or BUSD or USDC. There are so many out there. So that could be one strategy. And then through decentralized finance protocols, you can actually stake these dollars that you earn. You can stake them, which means you lock them in order, for example, to provide security to a protocol, or you can, for example, provide liquidity in a market and earn income based on fees that the traders are paying. There are really, let's say, there is a sea of opportunity in decentralized finance on how you can hedge against the bear market, or being able to have access to more capital to invest in a bull market, or simply leaving your cryptocurrency as dollar. And, you can be like the typical grandpa that is, not into technology and whatever, and you can still have the same tools. Like you can have your $100,000 in a wallet in dollars. It's not exposed to the volatility of crypto. You can have this in dollar, and you can be earning 8% per year. You can be earning 10% per year. You can be earning 6% per year.
Very interesting. I mean, with regard to how cryptocurrencies have increased penetration over the past couple of years, particularly since 2017, I think that was the watershed moment for most cryptocurrencies. I'm wondering what the blockchain/crypto space will mean for the world economy. Will this mean a movement towards more decentralized styles of doing business? And if that happens, how will that affect, let's say, the SEZ industry? Perhaps it might be that this new decentralized finance will take away the power of regional financial centers like New York City or London or Shanghai, and sort of diffuse it through various places. And it might end up being that a lot of these crypto-based special economic zones, like I mentioned, CEC or Cagayan, might be interesting places to look at. But could you tell me more about what this crypto revolution, I guess, will end up leading to?
Yeah, definitely. Like right now, the way we see this is that within the different niches of crypto and blockchain and its application to finance, it is really important, because what this is going to do throughout the years is that I think in most cases, the most important lesson that everybody can get out of cryptocurrencies is a certain amount of financial education, at least. And that is really good. However, we're not expecting that blockchain will wipe out banks or governments within the next 10 years. But the technology in itself is applicable to so many other industries. It's not only about finance. We have to remember, blockchain, the main value of blockchain, that it's a ledger, it's a ledger of activities. It's a ledger that is immutable, and it's a ledger where you can trust the data that you can read. And this applies to many things. So yeah, I see, for example, SEZs, crypto SEZs or blockchain SEZs, being really like the place of birth of the next, let's say, top application of blockchain in a certain industry. And maybe later on, we can expect like a network of these SEZs, and how the things that are created in this sandbox, they're going to affect the rest of the world. Like we can see this happening in the UAE now, where they are basically the main country pushing for voting on the blockchain, like governmental voting on the blockchain or issuing documents on the blockchain. And that's another side of applying blockchain to different industries.
Oh, absolutely. Particularly, I've recently become aware of this, are the non-fungible tokens that get used in this type of network. So can you tell us more about what non-fungibles are and how they function as compared to a fungible token like Bitcoin?
Yeah, absolutely. So non-fungible tokens basically are a special type of token that is not, let's say, tradable. And the main application for non-fungible tokens is to, let's say, assign.
So that means it can't be broken down into like 0.5 or 0.7. It's like
Exactly.
It has to be like one coin, right?
Exactly.
Okay.
It's one entity. It's one, let's say, string. And that's the thing. Like ownership is really important. One thing is ownership, and the other thing as well is scarcity. So you are to create NFTs as much as you want, or you are to create items and duplicate those items as much as you want. So, for example, if you were to create a passport for a person, that would be a one-on-one, because you can't have, I don't know, 3 passports for what the same person, on the blockchain. Like that one transaction where you own that passport now as an NFT, let's say, engraves it in the blockchain forever that is yours, because that is part of your wallet now. You can see it. But in terms of, let's say, like more into what's happening now, NFTs and the hype that is around it, it's really, again, about the concept of ownership on the blockchain applied to everything you might think of. So we are seeing art being sold as NFT, which is simply, let's say, it could be a 3D model, it could be an image, it could be a painting, a picture of a painting or a picture. It could be a domain name. It could be, for example, collection item like cards, baseball cards or football cards. Right now we have F1 as well in the game, NBA, and we see more and more getting into this market.
Oh, absolutely. I mean, it's the sky's the limit with NFTs from what I see, and what I'm particularly curious about is the applications of NFTs in, let's say, the FTZ industry or other things that I'm interested in, like shipping or logistics. So you would probably have a unique blockchain-based ticket for a shipping container moving from Shanghai to Mombasa, or you could have a plot of land inside of a special economic zone that's uniquely registered with an NFT. So I'm wondering, how does the ownership of an NFT entitle you to the physical ownership of the asset? So let's say that it's a plot of land, not necessarily in an FTZ. Let's say that it's a countrywide program. I'm very curious as to the ways that NFTs can get operationalized, because if you own, let's say, a digital piece of information, then the NFT itself can function as a hash that unlocks a cryptographically locked digital asset. But I was wondering, as for physical assets, how that translation might happen.
It's quite impossible to make the translation like directly on a one-to-one ratio. However, in the NFT can contain information. So the NFT just makes sure that at any moment, if you are the owner of that NFT, it reflects in the real world that you are the owner of that land. And the only thing the NFT does for you in this specific case is prove that you are the owner of the NFT. However, there needs to be a secondary mechanism to prove that NFT is linked to this land. But the only way for this to be happening within the NFT itself is for you to include the data. So maybe within the NFT, there could be text data indicating as a geographical location, exact geographical location, the edges of your plot. That could be done.
Right. So let's say GeoJSON data, which is like a spatial vector on a map, can be assigned inside of an NFT. And this is really exciting stuff. I'm thinking about other potential uses of this. Like I was recently volunteering at a COVID vaccination center, and I'm thinking about NFTs based on vaccination status for individuals and stuff like that. But I definitely want to be exploring these questions a lot more. I mean, this was a really enjoyable conversation. What would be some main takeaways that you think our listeners should have from this conversation? We've gone from crypto mining to stuff like trading to NFTs to how FTZs can attract more innovative cryptocurrency and blockchain companies. So, what are some thoughts that you think we can come away with?
Well, I think it's all of it is really, really exciting overall. For the listeners, whether they are in crypto or not, it's really an exciting time. We are pretty much buried in this on a daily basis. That's like our everyday activity is related to blockchain and cryptocurrency. So I think a good takeaway is to see how really this is shaping out the world around us, and to try to get into it, to be exposed to it.
Awesome. That's something that I'm sure a lot of our listeners are going to want to do. If some of our listeners want to expose themselves to the stuff that you're doing and any of your ideas and activities, what are some good places that they can find you?
Sure. You can find me on the website hashingfarms.com, or you can email me directly at Amine, that's AMINE, at hashingfarms.com.
Awesome. Well, Amine, I want to thank you very much for your time today on the podcast. Do let us know if you'd be interested in coming back. We'd love to have you on again, and I'll speak to you soon.
Absolutely. Thank you very much. It was a great chat.
Likewise. Thanks. Talk soon.